Okay, guys, so welcome to the Clement show. So today, the reason I want to start doing this video is to just give you guys some more information about what's going on in the market. And I'll always have some guests here who you can come in and they'll come in and share a lot of information about the market, where they are with the business, how they find the business going on in real estate. Sometimes it's going to be a mortgage as well, as we have here today. I have our guest, George, who is a mortgage broker that I've worked with. Some of you might know him or might be familiar with him because we've worked with some of our clients already. And so, George, just introduce yourself here a little bit.
I'm honored to be here, Clement.
Thank you. Thank you.
Yeah, this is awesome. Yeah, I'm looking forward to, talking about what's going on with mortgages, and obviously you'll fill us in with real estate and see where it goes.
So what got you into mortgaging, actually?
I've been in the financial industry since 2000. I actually started off as a financial planner with Investors Group, and then went to the banks in financial planning role, investment and retirement planning role, and then just kind of got tired of the banks and just came into this side of the world probably around 2013, 2014, and been with Dominion Lending since 2014.
Yeah.
And just having that financial planning background, it helps doing what I do and giving advice and providing solutions for people. It's the kind of thing that I always enjoy doing.
Yeah. And which company do you work with right now, or how do you go about it?
So it's Dominion Lending Edge Financial, right? Dominion Lending is the largest brokerage firm across the country.
Okay.
Right? And Dominion Lending Edge Financial, which is the firm based here out of the Don Mills office, I think we're probably like 14th or 15th largest within the Dominion Lending network.
Oh, really?
Yeah.
So what would you say? So today what we're going to really cover is everything to do with mortgaging and what's currently going on in the market, and a lot of, obviously, the big news about the interest rates and things like that. But first, I want to just talk about some of the questions that I typically get a lot from people that I talk to over the years, particularly this year. And as well as some of my clients, some of the clients who already purchased our property, some of the clients who were just waiting and trying to figure out what to do. So really, like, my first question would be, what do you think is needed to acquire a mortgage?
Well, at the end of the day, strong income obviously is going to be the key driver.
Yeah.
Right? Great credit scores, or half decent credit scores to get you into the top tiers for rates.
What would you consider half decent?
The normal benchmark is around 680 and above, but the higher you get into the 700s as your FICO score, the better it is. From a lender's perspective. At the end of the day, there's also your liabilities, right? If you have loans, car payments, stuff like that, we have to take into account when we're doing an overall mortgage application and trying to qualify you or qualify a client on what they can actually buy. And then, the other thing too now is, I guess since 2017 or so, we've had the stress test. Yeah. Right? Which basically adds 2% to the contract rate, the contract rate being whatever you receive from the lender. So if it's a fixed rate and you're getting, 5%, then we have to qualify you at 7%. So that contract rate, obviously impacts what people qualify when you look at all the other factors involved in putting an application
together. We'll get into the benchmark rate, I think, sometimes into this video.
Sure.
Though you've mentioned about the application. Typically, how long does it take for somebody to apply? So let's say somebody who's looking online, or like, how long does that time period take?
So it depends on what process someone takes. My process is collect full documents all up front.
Yeah.
Income verification, letters of employment, bank statements to verify down payment and deposits, right? So it's, it might be front end heavy document wise, but once we've done that and we've submitted an application, the turnaround time, depending on the time of the year and the lenders, is typically anywhere from 24 to 72 hours for turnaround. The longest time is really getting all the stuff together, because some people are really organized and they've got everything, and it's just like,
those are the best people to work with.
Well, you know what? Everyone's got a different style, right? And we just got to work with everybody and see what how they function and try and bridge those gaps.
That's true.
Sometimes it's a challenge, but when it's smooth, right? It's great, because then we vet everything up front, so that way, whether we submit for a pre-approval, and pre-approval is really just a rate hold, right? The lenders typically aren't looking at documents, but we are, because when you're going in to make an offer or you're going shopping with a client, you want the closest number possible.
That's true.
Right? So that way you can guide the client on the sales side and markets.
And a lot of times you'll find that some of them wanted a pre-approval letter. I know you've mentioned that. Is that something that you think is necessary, or is that something that a lot of lenders want to give?
So it's funny though. I think I've seen listing agents actually asking for pre-approval letters, right? Which is fine. Like we can do them. That's not an issue. Yeah. But again, the pre-approval letter, what everyone needs to understand, including the listing agents that are asking for them, it's a rate hold.
That's right.
You know what I mean? It doesn't mean too much, although as much as we've done our due diligence and we feel comfortable saying to the client that go and shop, you're good to go. Ultimately, when the time comes to a live deal, that's when a lender really looks at everything in fine detail. We've done our part, so we're usually quite comfortable, and sometimes people get annoyed because we're asking for so much information up front.
That's right.
But if we don't, the last thing you want is a surprise. You know, you've signed an offer, now you're ready to go. You got a condition of financing that may be shorter than we want, right? But you know, at least this way, if we've done our homework up front, we're pretty confident to say, all right, the client's okay. Mr. or Mrs. Client, you're okay. Yeah. You know what I mean?
So, what do you say to those people? And I do encounter some of them when I'm talking to a lot of potential buyers there. Yeah. And those people who don't believe in getting a mortgage broker, or who don't think I need to get a mortgage to get a property.
You know, listen, at the end of the day, most people need a mortgage unless they're fortunate enough to have the ability to pay cash, or they have a parent or someone that, you know, can give them the money to gift and pay cash. But the reality is, most people need a mortgage. Whether you use a service of a mortgage broker or you go to your bank, that's up to the individual. The difference is that as a mortgage broker, we have the ability to go to many lenders, right? Whereas you go to a bank, you get a bank product.
Yeah, so that was actually my next question. What is the major difference between working with a mortgage broker like yourself as opposed to just going to a bank? And I know we know of the the big five, the CIBC, the TD, the BMO. What's the major difference that
ultimately, it boils down to product solutions, right? Obviously, every bank has their own, and you know, we have mortgage finance companies, which are large institutional lenders, right, that have great solutions. You know, sometimes we can also get better rates. At the end of the day, the rate is important, but it's not the ultimate part of a mortgage, right? You want to know, you know, about penalties and being able to port a mortgage. So many little intricacies of a mortgage that have to be taken into consideration. We have the ability to go to, you know, well over 50 lenders, if not more, if we need to. Do we actually use all 50 lenders, me personally? No. Right? But, you know, I have my key lenders that I can plug certain circumstances into a
So is there any benefit for that particular person who has been banking with, let's say, TD for the last 20 years? You know?
Absolutely. At the end of the day, to speak to a mortgage broker, whether you use them or not, but to see what's out there and what's available, whether it is a better rate or there is a better solution, you got nothing to lose, right? And I think ultimately you'll find, as mortgage brokers or specialists, right, we're very well in tune with what's going on in the market, and you know, the advice component that we provide. You know, not to say that bankers don't give good advice. I used to be at the banks and I used to give advice, right? But we're solution focused, whereas at the end of the day, the bank is more or less product focused because they have a certain number of products that they have to sell from.
Yeah, so they want to make sure to sell you their product.
Absolutely. Actually, my manager, when I worked at CIBC, he says, when you work at McDonald's, you sell a Big Mac. Work at Burger King, you sell a Whopper, right? So that's what it boils down to. You sell their products, right? Even though there may be a better product elsewhere, this is where we come in, right? We can maybe find that better product, that better solution, or potentially that better rate.
There you go. So you've mentioned Canadian benchmark rate.
Yes.
For some people who first time they're hearing that, what is that?
So actually, currently, funny enough, the benchmark rate right now is still 5.25%.
Okay.
But it stipulates that it's the higher of the benchmark rate or contract rate plus 2, which is what we have to qualify individuals on. So right now, no one's being qualified at 5.25. Those are the good old days.
Yeah.
Right. Right now, let's say someone in the variable. So we're doing a lot of variable rates in the spring because there was such a gap between the fixed rate and the variable rate,
Yeah.
and people needed that gap to help them qualify for a little bit more mortgage, right? To be able to get that purchase price because where the market was. So, we're qualifying people. It was basically less than 5.25 today on a variable rate. If it's, say, a conventional mortgage, we're qualifying them, prime minus a quarter, so say 6.2 plus 2%.
Yeah.
We're qualifying them at 8.2%, right? Fixed rates, we're around 5.5% on the conventional, so we're qualifying them at 7.5%, so slightly lower now on the fixed, right? So it is getting a little bit tighter for people, and whether you go fixed or variable, that's a discussion based on the individual circumstances.
Would you say the benchmark rate is more of a benefit to the real estate market?
I think overall it did what it was supposed to do, especially now as we see it, right? Because when we were qualifying people at the contract rate plus 2%, we had that buffer. So as variable rate payments have been going up now with every time there's been a bank increase, right? We can see that people have been able to absorb it because we weren't qualifying them at that contract rate. Some people obviously, didn't make accommodations for that extra money, and we're humans, we spend it.
That's right.
But talking to a lot of people, as challenging as it is, right? People are still managing for the most part to deal with the increased payments every time the Bank of Canada makes a rate announcement.
Awesome. So thank you. Let's take a quick break right now, and then we'll be back for the next part here.
Thank you.
Everyone, guys.